Can you actually afford a $400,000 house or home? That's what we're going to be going over in this video. We're going to be Can you actually afford to buy a $400,000 home is a big question, right? I actually get this question a lot. How much do I need to make to buy a $400,000 home, or how much do I need to qualify to buy a $400,000 home? So that's why I wanted to put together this information. So what we're going to be covering together in this video is how much money will you need to buy a $400,000 home. What loan types we're going to be covering is FHA and conventional loans. What your closing cost is going to be. What other cost comes with buying a home, and what will be your monthly payment if you do buy a $400,000 home. What will your down payment be, and what income do you need to qualify to buy a $400,000 home? So that's what we're going to be covering in this video. Angélica Bonilla here with Excellent Real Estate here in the HD and the Bonilla Group. Going over two loan options with you today. In this scenario, we're going to be looking at FHA loan, and we're going to be looking at conventional loans. We're also going to be looking into a breakdown of how the down payment works, how other costs work when buying a home, and we're also going to be covering a home inspection cost, appraisal costs. Why do you need an appraisal? Your mortgage payments breakdown by interest rate, and like I mentioned, your income that you need to make to buy a $400,000 home. But I'm also going to be covering what's a cosigner, because I get this question a lot, like what's a cosigner, or why do I need a cosigner? So I hope this is all information that you're going to see that's really valuable for you. Different loan types, okay? We're going to be talking about an FHA loan, which is a 3.5% down, which is one of the more standard loan that buyers choose, because you could still qualify to use an FHA loan even if you have a 500 credit score, okay? You're just going to need 10% down instead of 3.5% down. So an FHA loan is just a loan that more people use. And if somebody tells you that an FHA loan is a first-time home buyer program, that's not true. An FHA loan can be used by anybody that's wanting to buy a home with the 3.5% down and can qualify to use an FHA loan, okay? So also we're going to be discussing a conventional loan, okay? So a conventional loan is used more if you have a higher credit score, and if you have a little bit more funds to work with, because a conventional loan you can put as little as 3% down. We're going to be looking at a 3% down, 5% down, and then a 20% down, which if you use 20% down, a lot of people would like to do that, right? That way they don't have to use or pay for mortgage insurance. Because with an FHA loan, you will be paying mortgage insurance, which is maybe $150 to $250 more. It all depends on your credit, okay? So they are going to be looking, if depends on your credit, that's how much you're going to be paying in that PMI insurance, okay? So the mortgage insurance. So that's what we're going to be covering, are these two type of loans, okay? So I also want you to see, okay, if you do use an FHA loan at a 3.5% down, what's your down payment going to be? So your down payment's going to be $14,000. That's what you're going to come in with an FHA loan at 3.5% down. If you're buying a $400,000 house, you're going to have to come in with $14,000 down payment. That's your down payment. Now let's take a look at a conventional loan. Okay, so if you're going to be using a conventional loan with the three, your down payment is going to be $12,000. Okay, but you're going to need a better credit score in order to use a conventional loan. Okay, but you're going to be asking the lender these questions, and they're going to be guiding you and telling you more information on the loans. Okay. So let's see the conventional loan at a 5% down. If you put 5% down with a conventional loan, it's $20,000. Okay, so now let's take a look at a conventional loan with 20% down. So your down payment's going to be $80,000. Okay, I know that's pretty high, right? That's why a lot of people really don't use these conventional loans at 20% down. Maybe somebody that already has a home, that's selling their home, and now they're buying maybe their second home, or they're downsizing and they have more of a down payment. They'll probably take advantage of using a conventional loan with 20% down, and they'll probably have the 80,000 to put down for that home. Okay, so that's what you need to keep in mind. Okay, but if you use a conventional loan with 20% down, you're going to be coming in with $80,000. Okay. Now, how do a lot of people ask me, do you have to pay for closing costs? Okay. And you're always going to have some kind of fee or cost associated with buying a home. Yes, you will always have closing costs as a home buyer. Typical closing costs are 2 to 3% of the home that you're purchasing. Okay, so whatever the home price is, you're going to minus 2 to 3%. That's going to end up with your closing costs. Now, I made you this quick closing cost fee checklist just so you can get an idea of what you get charged in your closing costs. I want you to keep in mind that not all of the closing costs come from the lender. Now, does the home buyer always pay for closing costs? Sometimes you can get money from the seller as a seller concession or credit, a lender credit, a new home builder incentive, or a grant, or use a first-time home buyer program to put down for your closing costs. Now, what are your closing costs if you're buying a $400,000 home? When you think about the cost coming from a 2.5% of the 400,000, it's going to be $10,000 in closing costs. Now, I want to talk to you about home inspection, okay? So you're going to be having other costs when it comes to buying a home, of course, right? And one of those costs is going to come from getting a home inspection, or getting a termite report, or checking the roof. Whatever inspection you want to do, that's going to come out of your pocket. Now let's take a look at appraisal report. It's normal for a home buyer to pay for their appraisal. Okay, the buyer typically pays for an appraisal, which can cost between $450 and $550. An appraisal is always required when it comes to buying a home. Okay, it's required by the lender, because they're not going to give you a loan if the house is not worth what you offered the seller for the house. Okay, so now let's see a typical home inspection and appraisal fee. It's going to be from $350 to $500, and it's going to be $1,000. Okay, I round it up. Now, what's your down payment and closing costs? So if you add your down payment, which is a 3.5% with an FHA loan, it's $14,000, and then your closing cost is 2.5%, so that's $10,000, right? Okay, so this is a typical FHA loan. It's going to be 3.5% down, so that's equals $14,000, and 2.5% of the closing cost is $10,000. Your home inspection and your appraisal is $1,000. So this is the amount that you're going to need if you're using an FHA loan with 3.5% down. You're going to have to come in with $25,000 if you're wanting to purchase a $400,000 home. Okay, now let's take a look at the conventional loan. So a conventional loan with 3% down is going to be $12,000. Your closing costs at 2.5% is $10,000, and your home inspection and your appraisal is another $1,000. So if you're using a conventional loan at 3% down, the amount you're going to have to come in to buy your home is $23,000. Now, a conventional loan, you really have to have a better credit score in order to take advantage of a conventional loan, okay? Now, conventional loan with 5% down is $20,000, right? With 2.5% in closing costs, that's $10,000. Home inspection and appraisal, another $1,000. So, if you're using a conventional loan with 5% down, you're going to have to come in with $31,000 if you're using a conventional loan with 5% down. So keep that in mind, okay? Now, if you use a conventional loan with 20% down, it's going to be $80,000. With 2.5% for closing costs, that's $10,000. Home inspection and appraisal, another $1,000. So if you use a conventional loan with 20% down, the amount that you're going to have to come in with is $91,000. So conventional loan with 20% down is going to be probably used by somebody that's maybe selling a home that they already had. So they have enough money to put 20% down, okay? So what's a cosigner? Okay, so a cosigner is going to be somebody that's going to be put on the loan so to either help you qualify for a higher amount or help you qualify for a better loan or get a better loan term. Okay, so keep in mind you're going to want to trust the cosigner because this is somebody that's going to own the house with you. Please keep in mind that this presentation is just an example, okay? All of the figures can change due to your credit score, your income, your debt to income ratio, okay? Everything needs to be taken into consideration when you're wanting to buy a home. 5 factors in a mortgage. So the mortgage payment factor is going to be number 1 is the principal, 2 is interest, taxes, insurance, and mortgage insurance. That's everything that's going to come with your mortgage payment. Okay, so now let's take a look at if you're buying a $400,000 home, less your down payment, which is $14,000. Okay, the loan amount is going to be $386. Then you're going to include your mortgage insurance, and that's what's going to be left of your loan. Okay, so $392,755. It's going to be your loan amount. Okay, so let's say at an interest rate at 7% and taxes at 1.1%, insurance, your payments going to be $3,408. Okay, so now let's take a look at a different scenario at an 8% interest rate. Okay, taxes, insurance, your payment's going to be $3,679. Again, this is just an estimate, just so you can get an idea of what you're going to be paying. Okay, so this is a little example here that you can take a look for, so you can get like a little idea and different payment types by interest rate, by taxes. Okay, so you can come up with your own payment. Okay, so just so you can get a better idea. Okay, so let us help you. Okay, let us set you up with our app, or let us set you up with our MLS home list. So we can actually set you up with homes that you actually want to see and buy. Okay, so let's take a look. With 3%, your monthly payment, if the interest rate goes down to 3% ever again, would be your payment would have been $2,430. Okay, that's would have been your monthly payment with 3% down. Now, let's take a look at your monthly payment with if the interest rate uh, drops or goes to 5%, your payment can be $2,924 with a 5% interest rate. Now let's look at your payment with the 6% interest rate. Your monthly payment would roughly be $3,166. Okay, and that's with the 6% interest rate. So let's talk about this. I always get this question. How much income do I need to make per year to buy a $400,000 home? And this is your answer. About $75,000, okay? And this is if you don't have that much debt. Okay, just keep in mind, this is just an estimate for you to have to kind of guide you uh, through figuring out if you even want to start the home buying process. Because, like I tell everybody, before you even talk to a realtor or a lender, um, know your numbers, make sure what you can afford, what you can't afford, and then move forward with that. Covered everything that you need to know if you're interested in buying a $400,000 home. Now, I hope that I was able to answer all of your questions through this video. If I didn't, you can go ahead and leave me a comment down below and I'll go ahead and I'll answer whatever question that you have. I want you to keep in mind that all of the numbers here are just estimates. Everything's going to change and everything's going to vary because you need to keep into consideration what's your credit score. You need to take into consideration to see if you can qualify for a loan. You have to see what kind of interest rate you're going to get and also the fees that you're going to be charged. And also if you're going to be using a first-time home buyer program or if you're going to go FHA or if you're going to use a conventional loan. So all of the numbers are going to be different. And especially it all depends on how much money you're going to be putting down. Okay. So I hope that we were able to answer all of your questions and give you just information that's going to guide you when it comes to seeing if maybe you can afford a $400,000 home. Okay. And also, I know we were talking about income and the income was $75,000 in order to qualify to buy this $400,000 home. But you also need to keep in mind that if you have more debt than you have income, that's going to change too. You're going to qualify for a lot less house, right? A lot of factors to consider when you are trying to get pre-qualified and actually see if you can afford a house. Okay, because I get a lot of people that call me and tell me, oh, I don't want to run my credit because I don't want to lower my credit. Then there's no way for somebody to tell you or a lender to tell you if you can qualify or you can't qualify, because sometimes people have really good credit but they have a lot of debt and they can't qualify. They need a co-signer. They don't have enough down payment. Okay, I can go on and on and on. Okay, guys? So the scenarios are going to be different, but this is just a rough estimate of what you're really looking at. Okay? I hope that you've enjoyed this video. Again, Angélica Bonilla here with Excellence Real Estate here in the HD and the Bonilla Group. Thank you so much for watching, guys. Bye-bye.